Good afternoon, this is Brad Dennis with BIS Commodities, and this is your weekly wrap-up show for the first week of October. This week we've seen some pressure on the grain markets, basically stemming from Monday's results, specifically in the corn. We started off the week with the quarterly stocks report, and we showed more stocks than traders had expected in corn. With that higher number, that was able to push us through the 445 level in December corn and make some new lows for the move. Not really surprising to see more stocks of corn. A lot of people had been talked about when the wheat crop came out. They were feeding wheat instead of corn to livestock, and that's kind of what showed up on the report there. On that corn-wheat spread, that's going to be something that everybody kind of wants to look at a little bit here. Remember when we were first seeing wheat being used instead of corn, we were 20 cents above wheat price over corn. Now you're $2.50 over that corn price basis the December. So we might see that spread unraveling a little bit, coming back down a little bit. We did hit our 50% retracement in the December wheat at that 697.5 yesterday, so it does have some technical levels up at this area, and with the corn, it seems like somebody's defending that 437 area, and with some of these shorts getting a little stale, maybe we see a correction in that spread over the next couple days. But I believe that would be a opportunity to sell. Upside, you've got resistance at 445 in December corn, and if you get over that, take those opportunities that you can find. Right now, what are we hearing? We're hearing Illinois 20 to 30 bushels better than what the USD estimate is. Iowa, we're about 10 bushels better than what the USDA is estimating. So when we saw Informa's numbers at a 158.8 this morning, definitely a very very realistic number. The big debate is how many acres do they take off of it, and Informa was taking off some acres. So I think that whole ship has sailed. Bottom line is we're looking at a huge crop coming out, possibly record crop coming out of the United States this year, giving us an ending stocks level of close to over 2 billion bushels. With that supply still coming in and demand not seeing any increases, there's no reason to see a rally that could really blast off here at all. Over in the beans, we're down about 25 cents actually at the end of the day in beans. Once again, it was victim to the quarterly stocks report. Everybody was looking for a 125, 124 level at which ending stocks were last year. Came in at 141. Yeah, they found 60,000 extra acres out there, and that'll be debated, but you've got to go off what the government is giving you at this moment. So we bring beans down from that fundamental reason of larger stocks going into the balance sheet going forward. All right, and then after we see that, we take out the technicals on the downside, took out the 100-day, 50-day, and 200-day. So we did take out some pretty substantial levels, and I would imagine that open interest for managed funds is down pretty good for the week. We'll have to see how that pans out next Friday, though. So we took out the technical levels, and then we bounced the last 2 or 3 days. And it's expected. It's not going to be a downhill ride right away. You're still going through harvest. What we are seeing, though, is right now from early yield results, we're over 50 bushel an acre in Iowa here. Yield results in Minnesota so far have been over 45. So we've got a good crop out there still. People are very surprised on how the beans have recovered from the dryness over in August and such. In Illinois, we haven't really seen any yield results, and that's due to those beans still being green. These last rains have helped out, and they're waiting for the beans to mature and then go forward from there. The bouncing beans, not only did we take out those technical levels to the downside, but then during the week we did see a little bit of a bid come back into the meal, and I think that that's mainly what got beans going to the upside. Now this whole week has been Golden Week over in China, so we haven't seen them actively buying anything. Even if they were buying anything, we wouldn't be able to see it because the government is shut down right now, and there's no daily announcements of sales. Next week, China will be coming back, and if it looks like good prices for them, they'll definitely be in the market. I would imagine there still is downside on the bean market. We'll be cutting more and more beans next week. The weather looks good, and those beans, it seems like the attitude is those beans are going to go right to the market, going to be sold right out of the field. So with those beans giving us a little bit of hedge pressure, maybe we can test that 1265 area that we saw earlier this week. In the wheat market has actually been the strongest market out of all of them. We're up about 55 cents in wheat over the past 2 weeks. Reason being, there's some concern about frost damage in Argentina, although right now we're seeing some rains that might be paring back that damage. And we're seeing good interest from Brazil for our wheat. Rumors about China looking into our wheat as well. So with that demand coming in here, once again it goes back to that corn-wheat spread. All right, so we went up 55 cents in wheat. We've only been at this 440 area in corn. That's allowed that spread to increase by about 50, 60 cents. At some point they'll unwind it. Maybe it's because you did buck up against that $7 area. Maybe it's just a correction of wheat coming back off. The world still has a lot of wheat in it. There aren't any issues right now with a supply issue on wheat. But numbers are being pared back. But for every number that's pared back in, say, Ukraine, you're seeing Stats Canada coming out and increasing their wheat crops. So kind of keep an eye on that and think of that as a spread trade and how that adjusts over the next couple weeks. Moving on to the government shutdown. The government shutdown did not allow for unemployment data out this morning. So without having jobs data, we're relying on the ADP data that was released on Wednesday, which was 166,000 increase. People are kind of saying, hey, we've got to have a little bit more job creation than that. So they were a little bit disappointed with that. We had an ISM services number that came out this week. Even though it was above that 50 area, it was pared back from last month's was around 58, 59. Now we're down to 54, 55. So you're seeing these numbers come back. Not good on the jobs data and the services data. And unfortunately, with the stock market these days, bad news means higher prices. It's addicted to the stimulus, and as long as you have poor economic data, the traders feel that the government's going to come in here and fix everything and keep that money sloshing around, and all will be good. At some point, we will reflect the economic data that's coming in. It's just not at this time. Right now, you probably have your S&P trading about 1660 to 1700 or so until more news comes out. Moving on to the meats. Once again, this is one of those markets that's going to be affected by the government. You don't have box beef numbers coming out in the during the day to gauge beef prices. You don't have hog cut out in the morning to gauge hog prices. And without having that information, it's going to be a little bit of a guessing game out there. We did see cattle close a little bit higher today. We did see hogs close a little bit higher today. Cattle We're hearing the 126 trade down in Kansas and Texas. That was yesterday. 198, $2 addressed. That was coming out of Nebraska. So futures are a little bit higher than that right now. And we'll have to see if that reflects better bids this afternoon or not. As far as the hogs are concerned, last Friday we had the hogs and pigs report. Everything came in at about 100% of last year, so that was a little bit bearish compared to what the trade was thinking. So we did put pressure on front-end hogs. At the beginning of the week, we have bounced back some this end of this week. Like I said, cut out. We're not sure exactly where that's at without the government reports. There's some other sheets that are out there that figure it that might be a little different. But for right now, we're kind of up in the air. Looking forward to next week. Still going to keep an eye on what's happening with the government. The big date on the government is October 17th. If we should default on any kind of debt, that's going to be highly detrimental to the economy here. You'll see bonds being sold off because the risk will not be taken by fund managers. You'll see the ratings go down, and a lot of those bonds, AAA rated bonds, will no longer be AAA rated bonds, and they'll have to be sold out of some of these portfolios. Lower bond prices equals higher interest rates, so all of a sudden mortgage rates go up and we start to see the housing market slow down again. So we'll see if that all happens. It seems like the government will come through and do something about it, and we will not get to that point, but everybody's got to look at the worst, but hope for the best there, I guess. As far as grains are concerned, we've got about a 5-day window next week. After some rains this weekend, they'll end up on Sunday, they'll be done with, and then we don't have a rain event until October 12th. We're hoping to see some good harvest and some good yields come out. And we'll just have to wait and see. Without data supporting sales or what's happening on in the international world, we're going to have to adjust to what yields are coming in, and right now they're pretty good. A correction in that corn-wheat spread could give a bid to corn. If it breaks over that 445 technical, probably look to be a seller at some point because we do have a record crop coming out. Other than that, beans, you just have to watch to see if there's any interest down at these levels. So, anyways, that is the report for the first week of October, and end of report.